What's up everyone, it's Caddy with MoneyVest. So this is going to be our weekly video on the S&P 500 where we're going to be spinning the wheel and we're going to be randomly picking a company in the S&P 500 to do a full fundamental analysis on that stock. Sometimes we find incredible companies, sometimes we find not so great companies. So today we're going to be doing that again as part of our weekly surprise analysis. Hope you all enjoy it and find it helpful. Please make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. And again, links to our Discord and Patreon is going to be down below if you want to join. We did our MoneyVest platform launch yesterday. Super successful. We've got 200 people signed up already. Very, very excited, and people seem to be enjoying a lot playing around with the platform itself, doing a full fundamental analysis on individual stocks, calculating your own intrinsic values now, and of course price targets on individual stocks. So link's going to be down below. We've got a 51% discount right now. This price is unfortunately going to increase as we build out more features and more functionality. So if you want to lock this price in forever, link's going to be down below. We'd love to have you on board. And again, if you have any questions, feedback, you can open a support ticket and my team will get back to you as soon as possible. So this right here is the Wheel of Fortune. So we've got 503 companies. What I'm going to do is I'm going to shuffle this first and then we're going to spin the wheel to see what kind of company we're going to be analyzing today. There you go. We shuffled it and now we are going to spin the wheel and now it's spinning, and then we'll see which company we land on to analyze using our MoneyVest platform. So the company for this week is going to be SWKS. I believe that is Skyworks, something to do with Skyworks. I can't exactly remember, but SWKWorks is Skyworks Solutions. So that is the company. I believe it's in the software space. We've got 3.34 as the M score for this company. You can come down a little bit, read more about what they do. So they engage in the design, development, and manufacture of proprietary semiconductor products. I think last week we also got a semiconductor company. We've been getting a lot of semiconductor companies. Companies headquartered in California, currently employs almost 10,000 full-time employees. And the company is Analog Semiconductors, connecting people, places, and things across new applications within the aerospace, automotive, and broadband, cellular infrastructure, connected home, entertainment and gaming, industrial, medical, military, smartphone, tablet, and wearable markets. So they've got a lot of markets that they operate in. And if you come over to the company's numbers, so again, we can look at these numbers as well and get a good sense of how the company is doing. I can already tell that this is actually quite a good company because we've got a current ratio that's well over 5. Quick ratios that's well over 3.8. Net debt is negative by 227 million. We've got strong growth across the board, and we've got share buybacks of about 1 to 2%. But the forward earnings expectations are not strong. So we'll take a look at that as well. Valuation also seems to be quite reasonably low. We're looking at under 20 times for a trailing earnings multiple and a little bit under 4 times sales and just under 11 times free cash flow. So this is a company with, again, strong margins as well. So let's just quickly take a look at the MoneyVest metrics. So it seems like 3 years, we've got growth, slow growth, and high growth across the board. If you come over to a 7-year analysis, we've got slow growth to somewhat stable. This right here has been the revenue. So we've gone from 3.6 billion to well over 4.7 billion. If you come over to gross profit, operating income, net income has been declining a little bit by about 0.18%. So it hasn't really gone anywhere in the last 7 years. But we've got, again, a very similar trajectory for gross profit, operating income, and net income as well. We did see a bit of a spike in 2021, slight increase in 2022, but then of course coming back down. If you come over to the 10-year analysis to better understand how well it's doing over 10 years, it has increased. So it's across the board getting some nice growth measures and a 4 out of 5, which is good. Shares outstanding have gone down by 1.8%, so that means the company is buying back shares. Again, that's also pretty solid. That's what we want to see. However, it's not very consistent growth, meaning that not every year the company is actually increasing revenues and profitability. It's more about stabilization, then an increase, then stabilization again. So maybe it's possible that it goes sideways in terms of revenue and profitability for another couple of years before increasing. We'll take a look at the analyst estimates for the future in just a minute. Now, coming over to the margins, by the way, this is going to be shares outstanding. That they have done very consistently is the share buyback. Very, very good. I mean, they've gone from about 194, 195 million down to about 160 million That's a pretty solid buyback. And over the last 5 years, the buyback I believe has been much stronger at 2.6%. Again, that is significantly more than the last 10 years. So we've done more share buybacks in the last 5 years as they have done in the last 10 years. So that is something to keep in mind. We're going to be plugging these numbers in on our analysis when we're forecasting for the future. Now, when it comes to the margins, they have gone down. So we have seen gross margins come down from 50% down to as low as 44. Operating margins from 34% down to 24, a full 10 percentage points coming down here. You can plot these numbers and again, see for yourself, visualize a lot of the data on our platform. And again, this is where the margins are coming down for Skyworks Solutions, unfortunately, as over the last 7 years, or in fact, 7 years. Yep, so that's what we're looking for. It's been coming down, so obviously not great. Operating cash flow margins have expanded a little bit. So they've gone from about 38% to now stable at 38-39%. So we haven't really seen a lot of expansion, but yes, it's been mostly stable. And free cash flow margins have in fact gone up by 31% to now sitting about almost 34%. So a little bit of expansion on cash flow margins, but definitely coming down on gross margins, operating margins, net margins, and EBITDA margins as well. Now coming down to efficiency, we've got efficient across the board. Return on assets sitting at well over 11.6 versus an average of about 16.8. Return on equity at just over 16% as of last year, 22% on average, and return on invested capital and capital employed about 14 to 15%. Respectively, and on average 22 to 22% respectively as well. So again, these are numbers that are pretty solid. We want to see these as high as possible, but even in the double digits here, mid double digits, it's actually pretty good. CapEx as a percentage of revenue of under 5%, which is actually lower than their average of 10%, solid. Operating leverage of 2 in 2023, that's pretty good, average of about 2.28. And again, in our future updates, we're going to be providing you with a glossary where you can understand better what every single one of these terms and these metrics mean and how they're calculated, so that you have a more educational analysis, so that you understand exactly what those metrics are, what those numbers mean, and how they're calculated, so you can have a much better experience on the platform and you don't feel like you don't know what this metric is, right? So you'll be able to quickly hover over it, click on it to better understand and read up on what that metric is and get a more educational experience at the same time. Stock-based compensation as a percentage of revenue, operating cash flow low at around 3 to 9%. Free cash flow, it's a bit high at 11 to 14% on average. Now, when it comes to the financial table, we do have the cash level increasing, or in fact actually worsening, because it's coming down, and the debt levels are also coming down, so they're both going down at the same time. However, cash has decreased significantly from 1.6 billion down to 738 million. We'll take a look at the quarterly numbers in just a minute, and of course debt levels have also come down, and as a result, as of 2023 though, the company did have more debt than cash on the balance sheet, but I believe as of most recent quarter, the company has again turned the corner towards having more cash than debt on the balance sheet again. Everything else looks excellent, with cash to debt sitting at around 0.57. Makes sense because the company's got more debt than cash as of the 2023 numbers, so that again is not very good. Goodwill as a percentage of assets, this is what I was worried about. This is actually very, very high, and you can see that it's only gone up, and that's why we've got very important metrics in place, right? This is some of the underrated financial metrics that people ignore, such as share dilution, stock-based compensation, goodwill. Those are the silent killers for stock returns. If you've got a company that's issuing a lot of shares and diluting shareholders left and right, you need to be aware of that. If the company's got a lot of goodwill on their balance sheet as a percentage of total assets, in this case, Skyworks has almost 40% of their total assets in goodwill. Goodwill, for those of you who don't know, is an intangible asset, right? It could be a patent, it could be trademark, it could be another company that they have acquired. It could be anything that cannot be seen or touched or felt, right? That's kind of like the book definition of what intangible assets are. But what we want to look for is actual, tangible, hard assets such as cash, investments, property, plant, equipment, physical assets that actually have value. But goodwill, I mean, its value is going to fluctuate, and if they're realizing about 40% of their balance sheet in goodwill, most likely they're kind of overestimating how much goodwill they really have on the balance sheet. So that's always something to keep in mind. Now, coming over to valuations, valuation-wise, we've got a reasonable to very cheap value for Skyworks, which is good. That's exactly what we want. We want lower P multiples, lower prices sales, lower free cash flow multiples, so that it actually makes sense for us for that company. And again, you can start plotting these numbers and start visualizing what that means for the company. If you come over here, you'll notice that, of course, it was trading at a much higher level back in 2020, and since then it's come down significantly. And if you come over to the price for SWKS, which is going to be Skyworks Solutions, I'm assuming the price has also come down from its historical highs. So you can see that it's actually come down from 2021 of $186 down 43%, which makes sense why the valuations also come down significantly. If I remove for just a few numbers here, you can see the price to earnings multiple from 2020 31 times down to now in 2023 trading at around 18. And again, you can plot for a lot of other numbers on the platform. So let's just go over to prices sales. Again, you can see how much it's come down as the price is also rotated back lower. Now, coming over to the fundamental analysis, you can go back 8 quarters. Now, this is more on a quarterly basis. We were looking at annual data, but now we can look at quarterly data. We can also look at annual over here, but let's start plotting in for revenue, gross profit, and then we can also look at operating income and net income as well. And you can see that, again, it's been a little bit more stable. There's not a lot of growth on a year-over-year basis or on a quarter-over-quarter basis, but that is still somewhat reasonable for the company. We've got net income in the most recent quarter, about $183 million in the quarter ending in March 29th. Now, coming over to balance sheet, as promised, let's take a look at their total cash as the most recent quarter, $1.2 billion. And let's come down to take a look at their total debt. So long-term debt sitting at about $993 million as of the most recent balance sheet or most recent quarter. And you can see that it was actually more, so more debt than cash on the balance sheet up until the June 30th, same time last year, 2023 quarter. But after that, of course, they have seen more cash than debt. And of course, now resulting in a negative net debt of about $220 million, which is very good. That's exactly what we want to see. So they have improved their situation on the balance sheet here, which is good to see. Now, coming over to some ratios, just to see what the company is doing on a trailing and a forward basis. Again, forward P, we're trading at 17. Prices sales, we're trading at a little bit under 4 and just over 4 on a forward basis. And price free cash flow trailing at a little bit under 11 for the company as well. So it just goes to show that it actually is trading at a reasonably cheap valuation. We've got a hold rating on Wall Street with 1 sell rating, 22 holds and 9 buys. And we've got a $98 in the price right now. And then, of course, $136 in the high price target. We got $103 in average and about $83 on the low end for Skyworks Solutions. And when it comes to the CAGR, we're not expecting for a lot of growth here. We're only looking at 13% CAGR for the company. So on a compounded annual basis, on a 5-year basis, we're only expecting about a 13% growth rate, with revenue expected to grow at just over 3% for the business as well. So it's not a lot of growth expected from Skyworks Solutions. So if you come over to the analyzer and if you try to forecast for the next 5 years, let's say, P multiple for the last 5 years was just over 19. So that's pretty solid. So let's just plug in 20 here, and the growth rate, of course, at 14% for the next 5 years. Share buyback is very strong at around negative 2.6%. We're going to keep that intact. If we hit calculate, we're looking at a stock that is undervalued. 30%, $137 is going to be that fair value based on a 14% growth rate and a 20 times PE multiple. You can come down and take a look at that sensitivity grid as well at around 20 times PE multiple, 14% growth rate. And again, you can kind of play around with these numbers and see for yourself that based on your assumptions, your analysis, what if you apply an 18 times PE multiple or a 16 times PE multiple based on a 10-12% growth rate? Of course, the fair value is going to be lower. But this is a company that, you know, I could definitely research more. I could definitely learn more about. Of course, there's a deeper dive that we need to do into this business to better understand what is it exactly that they're providing in the semiconductor space to their customers, and how much of a moat that does this company really have. But just strictly based on the numbers and based on some conservative expectations here, we're looking at a 30% undervalued stock with a future price target of $270 a share with an estimated total return of almost 100%. Of course, make sure that you do your own due diligence and your own analysis on the platform to better understand whether it makes sense for you to be looking at Skyworks more seriously or not from an investment opportunity standpoint. Now, coming over to the technical analysis, this right here has been the overall sort of higher low for Skyworks. And for the most part, it's been getting rejected at a very strong resistance here at around $112 a share, although it has given us a very nice tradable opportunity every so often. And there's another very strong support sitting right over here for Skyworks Solutions. It's going to be sitting roughly at around $84, $85 a share. Given that the balance sheet is improved and we are seeing some cheaper valuations from a risk reward standpoint, Skyworks definitely does provide at least some value. But of course, it's still trading at a resistance of $112. So for me personally, I think $84, $85 inside this green rectangle would be a very good level to keep in mind as an area of support, something that I could consider from both a tradable and an investable opportunity standpoint for this company. So hope you all enjoy this video and a complete update on this stock, a surprise company, again, spinning the wheel, and we landed on Skyworks Solutions. Make sure that you drop a like and subscribe to the channel. Again, if you want to get access to this entire platform, right now we're running a 51% discount. You can pretty much do your full fundamental analysis on the platform here, and we're going to be adding a lot more features over time. This is only the beginning. So link's going to be down below. We'd love to have you on board. As always, happy investing. I'll see you all in the next video.